I'm Anne Berry, host of Brew Markets, and I'm delighted to be joined today by Kevin O'Leary, the serial entrepreneur, investor, and best-selling author. For over 15 years, he's warmed his way into our hearts on Shark Tank, where he's earned the nickname Mr. Wonderful. Today, we talk tariffs, the genius of Elon Musk, the data centers powering AI, and if the US should launch a sovereign wealth fund to pay down the national debt. Kevin, welcome to Brew Markets.
Great to be here. Thank you.
So, Kevin, we have to start with trade, right? Because it's dominating the headlines. And you have been an advocate for tariffs on China as a way to compel that nation to sort of play by the world trade rules. When you look at the tariff deal that's been struck with the EU and with Japan, do you think we should be using the same tactics with those two trading partners?
No. The thing to realize about these deals, let's look at EU first, because there's a lot of moving parts in the EU deal. So the minute the details of the deal come out, almost within hours, you've got France and Germany pissed off. So no one's really happy 100%, which means to me that this will continue to be fine-tuned now, because the only reason, because these are asymmetric tariffs now. Everybody thought it would be 15% on each side. That's not the case. It's as high as 27%. Tariffing European products being purchased in the U.S. and open markets for American products into Europe. And so why would Europe ever agree to that? You'd ask yourself, and I'll tell you exactly why. Two reasons: pharmaceuticals and automotive. Mm-hmm. The American market is so massive to those two industries, to those sectors in Europe, that they have to cut a deal. So by leaving a tariff on certain products, it forces European companies to set up operations in the United States. And they've committed billions. They've basically said that. I have to give some credit to Trump. He's broken through to open these markets up, mm-hmm. which have not been open for decades. And so that's worth something to the indices, and that's why you're seeing all-time highs in the U.S. stock market. I would say right now we're in the fifth inning of all this stuff. But China, that's a different story.
Tell me, what do you think happens next with China?
There are so many elements to the Chinese deal that are not tariffs. And let me give you an example. IP theft, mm-hmm. been brought up now for 4 days in a row in the discussions. Number two, access to the Chinese markets. Number three, Chinese access to the financial markets in the United States, notably exchanges. New York Stock Exchange and NASDAQ, because they're not compliant yet in some of the rules. Number four, figuring out the decades worth of complaints unresolved at the World Trade Organization. There you have more issues. It's more of a leveling of the playing field. And then you've got this behemoth narrative going on AI and technology theft. I think what both sides realize is the country that has the best AI is going to win the wars of the future, period. Because it's going to be fought from space or robotically on the ground or with drones, whatever it is. You need a lot of AI tech to do that successfully. And here we are in this dance about how many chips get sent to China and what tech stacks they're going to use and the NVIDIA narrative and all that stuff. This is so complex. But China, unlike most countries, has real leverage against the U.S. from everything from rare earth and rare minerals, rare metals and all that stuff, to a giant consumer market that even I want to be able to invest in. I'd like to sell stuff to China. So, and lastly, on top of this, the icing on the cake is no administration in history has ever tried to negotiate so much stuff in 6 months. But because the market has seen the signals and understands the path, it's extremely optimistic. But I must tell you, I believe that half of this optimism has nothing to do with trade negotiations. It has to do with the fact that every day we see more evidence of the productivity power of AI.
You said, almost as a throwaway comment just now, Kevin, the Chinese market, huge in terms of the number of consumers, they have real leverage. Quote, you even want to be part of it. When you think about your own investing strategy, are you in Chinese stocks? If I look at your equity portfolio, have you bought the likes of Baidu and others?
I am, and I do have them. And I must admit, the volatility has been unbelievable. I mean, you need, I'm a very disciplined investor in the sense of diversification. I do not let any country be more than 20% of a portfolio, and I never let any one individual stock be more than 5%, or any sector more than 20%. I mean, there's a tremendous amount of diversification, but China has growth metrics that are being questioned now because of tariffs and because of real estate collapse and because of what are the real employment numbers and what happens, to the Apple deal. There's just a lot of different moving parts. However, it is the second largest economy, period. And so there's no way to have a global portfolio without a position in China. And so the stocks you mentioned, yes. I mean, I own an index with those stocks in them. But you talk about volatility. I mean, you get nosebleeds with volatility there. You can get a 20, 30% move in 2 days. It's in a large cap Chinese stock based on some headline.
Yeah. Well, and let's talk some more about that investing philosophy. No more than 5% in any one stock, no more than 20% in any one sector. And you've talked about diversification a lot. How possible is it for the everyday investor to diversify truly now? If you look at the concentration in the S&P 500, something like 30% of total market cap's coming from the Mag 7.
Yeah.
Right. And even if you don't have the kind of volatility you describe for Chinese stocks, a moderate move in any one of those top 10 names moves the whole index. So how do you think a US investor should think about diversifying given the composition of the major indices today?
Well, I mean, you're bringing up a fantastic point. And in fact, I use indexes, but I don't use the traditional ones. I do not buy the S&P indice because it is way too concentrated for me. There are other ways to play it. There's and I have to be totally transparent and disclose this. There was I owned a company and was involved in called O-Shares that practiced that philosophy of diversification. It didn't allow large positions to occur. So if Tesla ran, it would cut it back, keep it 5-6%. And that company was bought by Alps, but I still use those indexes. So my largest holding in the U.S. is OUSA, which is a derivative of the S&P 500. It has more diversification, but it also mines out weak balance sheets. I don't own airlines right now, for example, because they're too upside down in terms of debt. And, companies like Boeing have been a disaster. You haven't made any money in 10 years on that thing. So I don't tend to own those. And that indice removes them. It's sort of a higher quality, dividend paying, less leveraged in most cases companies. So a subset, let's say 30% of the S&P 500. The more interesting indice right now in the U.S., given all the tariff stuff, is what's going on in mid-cap and small-cap companies. And that indice that I use, again, owned by Alps, OUSM, it looks at the Russell 2000 and mines out, excuse my language, but all the crap, because 2/3 of those companies in the Russell 2000 don't make any money.
Yeah.
So I own 1/3 of them. And it's actually been a very good performer because it's not so exposed to tariffs. These are domestic companies. And we talked earlier about international tech. It's OGIG, OGIG, same thing, owned by Alps. And the other one, which everybody says, wow, Europe, that's interesting. OEUR owns the large cap Europes, and I own all of those. But it's sort of 60% of the holdings in my equities is OUSA, and the rest of the remaining 40 spread across the other indices I talked about.
So every stock now feels like it's an AI stock.
I've come to the conclusion, as the market has, that AI is going to affect all 11 sectors of the economy. We have 11 sectors, including real estate. It will affect that as well. But how to play it as an investor, and I've learned this a long time ago, is, let's take an analogy from crypto, okay? Crypto, to me today, is a problem, and I'll tell you why. It has been so wildly successful over the last quarter that I'm way over sector allocation. Now, luckily, because the Genius Act has been passed just last 10 days ago, I don't call stablecoins crypto anymore by the definition of crypto. They are basically a way to own a U.S. Treasury. So it's been able to be a cash equivalent. Mm-hmm. Some people agree, some don't. So, for example, I was a very early shareholder in Circle. I don't know if you've seen what happened to that issue. It's one of the most successful.
Oh, incredible IPO, yeah.
So, yeah, and so, we have to deal with that. It's gone way past its allocation. So, but the actual stable coin itself, the holdings we had in stable coins have been reallocated to cash equivalents. But we still had to sell down some positions to get under 20%. So I've generated a tremendous amount of cash in the last 3 weeks, which are actually held in USDC, in stable coins. And so it's been a very interesting quarter. So I want to draw that analogy to, because I bought the infrastructure of crypto, Circle is an infrastructure company. I also own the exchanges, Coinbase, Robinhood, and WonderFi in Canada. WonderFi in Canada has just been bought by Robinhood. They were half the holdings. So when you think of AI, think about, what do I buy that is really the picks and shovels, and what do I buy that is actually a direct ownership of the tech, equivalent to, let's say, a stable coin or Bitcoin itself? My conclusion has been, if I want to play the long term, the next 5 years or even 10 years in AI, I need to own data centers. I need to own real estate where data centers are built. I need to own power contracts that power the data centers. So, I mean, because I've seen this movie so many times before, once you convince yourself as an investor, okay, this is gonna be here for a while, and it is. AI is a very big deal. How many acres of land should I own that data centers are going to be built on, and where should they be, and what power sources am I going to buy now? So I've set up a completely from scratch a whole team that just analyzes data center sites in North America, and negotiates power contracts and permits and fiber contracts and water permits. I mean, I've been doing real estate my entire investing life, but I've never seen an asset class in real estate more complicated than this one. This is incredible. I mean, and I am very long in this space right now, but this is going to be a very big sector for me.
And are you more that sort of 20% bright line exposure, 20%?
Well, I have to admit to you, I've never been. Real estate's always been 33 1/3% of my entire book, and always will be. I break the rule there.
Okay.
You know why? Real estate doesn't go to zero. The only way you go to zero with real estate is you put too much leverage.
Over leverage, yeah.
We've talked about this before.
Yeah.
I mean, I think for me, but now data center real estate has the most attractive returns and is the most complex. And I have come to the conclusion, and I'm pretty sure I'm right, and others that do this have also just realized in the last few months, we don't have any power in America. We do not have power. We've got big problems. And the Chinese are now just lighting up coal-burning fire plants to power their AI data centers. And we don't have that option here because they don't need a permit. They just go to Xi and say,
just do it.
Let's just do it.
Yeah.
That's one of the advantages of whatever you want to call that regime, because I don't know what it is. I'm not sure it's communism, but it's a supreme leader situation where one guy decides everything for everybody all of the time.
And for that portfolio of real estate, when you say you've got an entire team sussing out the best locations and how to put those packages together, are you literally doing this as private investments, or are you doing this through investments in REITs that are exposed to this, or are you investors in private equity funds that are focused on the data center play? What's the asset class that you're sort of tapping to execute on this?
Well, so far, I'm doing it all myself. I'm basically doing purchase and sale agreements on land. I'm funding all of the engineering studies. I'm funding the fiber contracts. But it's, a single gig is a $5 billion investment.
Right.
So let's say the soft costs are 30 to 50 million. That's what I'm funding right now. But I've let everybody know in the market what I'm doing, and each hyperscaler is looking at every project everywhere. And so the market has completely shifted. The old model of data centers, just cloud-based service, was I'm a developer. I do 250, megawatts, and I lease it out. And I own everything, and I just have tenants. That's not what we're doing today. What we're doing today is we're preparing land and permits to a specific, very complex power metric that and I bet there's only 18 guys in the world doing this. I mean, it's so complex. Gensler, Sudlow, all of these firms that are very expensive are part of our team because we have to prepare the site, but they don't want a gig anymore. They want 5 to 10 gigs. So you're talking about 5,000 acres, 6,000 acres, 7,000, 8, 9, 10, 11, 12,000 acres, contiguous acres with millions of cubes of water, unbelievable amount of fiber network, hospitals, roads, towns. You know, you're going to hire 10,000 people. So this is a whole new ballgame. And the only way you can do that is you need to be a partner with the governor of that state and their administration or the premier of that province, because Canada is getting a lot of focus because of its power. They have power, a lot of power, and a lot of low-cost power. So all of a sudden, you know, after a decade of rule, of the rule of the idiot king up there, there's a new guy in town, and Canada's back on the map.
The way in which this all comes about, the way you're putting these deals together, which is what you're really doing, right? You're constructing and packaging deals. Kevin, when I listen to the sheer scale of what you're describing, the thought I keep having is, given the strategic importance of this, from a security perspective, a national security perspective, the scale of it, the different stakeholders you've described, which inherently involves politics, is this the perfect place for something like a US sovereign wealth fund to start stepping up, getting formed and deploying capital? Talk to us about what you think about this concept that President Trump has put out there of a US sovereign wealth fund.
I actually don't think that will happen. And I'll tell you what, 2 reasons. Number one, I don't think Congress will ever go for that on a bipartisan basis.
But do you think it should? What do you think of it as a concept?
I don't like governments picking winners and losers. They haven't been very good at it, ever. Administrations, change every 4 years or 8 years potentially, which is, in the context of sovereign wealth, very short period of time. Sovereign wealth funds work when the mandate is singular. Let me give you an example. A good example, I would argue. Back in the 70s, 2 countries with the same amount of available energy started sovereign wealth funds. Norway and Canada. Almost to the day they started together. Almost to the same number of barrels available in the ground. Millions and millions and billions of barrels. You think about Alberta, Canada, and Norway offshore development. Who are the richest people on earth today? Norwegians. Because the mandate of their sovereign wealth fund was singular. They did not allow government after government to touch it. It was only put in place for the people, where the principle was retained and remained, and they would invest it and spend the dividends or the interest. But the core principle, which kept growing based on the royalties they charged on their oil output, went from millions to billions, on its way to trillions. Canada allowed their governments, multiple governments, I'm not blaming any one government, to piss it all away, mostly on social programs, which never were effective at all. They have nothing compared to what the Norwegians have. So let's take an analogy, because I love the point you brought up. Let's talk about the ANWR, which is almost equivalent to what the Canadians and Norwegians started with, which have never been tapped in the U.S. It's in Alaska. If Trump decided to, and he could open up the ANWR and say, we're going to charge a 16% royalty, but the only mandate, the only use of those proceeds is to pay down national debt.
I was literally going to go to pay down national debt, because you've talked a lot about the fact the United States needs to delever.
That's it. And so there you would have a Norway play,
right,
where the current administration would give a gift to the future, because they would write it into law. And I think you can get Congress to agree to this. Okay. Put it in that the ANWR could only be used, the proceeds of the ANWR, from the government's royalty perspective, to pay down national debt, including what is being brought in by tariffs, or perceived to be being brought in. You could actually get a hold of this problem and start to, we're going to increase it by $3 trillion. So this would actually start to get you more towards a balanced budget. But Canada-Norway is a great example. Very poor management of the federal government there, and the last decade it's decimated the country. I mean, 25% of the population there is at the poverty line when only a decade ago 10% were. That's the idiot king, but he's gone. And so you have to start thinking about the potential of the post-Trudeau years, what could be done with all the power they have, and that's why I'm being very optimistic.
What about, just on this note, taking TikTok and dropping it into something like a sovereign wealth fund with the proceeds over time, with the return over time used to pay down national debt?
Well, you've opened a really big can of worms with TikTok, because TikTok has now become a pawn in the China-U.S. negotiations. Let me give you the lay of the land as of today, because I'm one of the many syndicate members trying to buy it. There's all kinds of people trying to buy it.
Yeah, tell us about that, yeah.
Okay. So if you'd asked me 2 weeks ago, what's going to happen to TikTok? Is it going to go dark on September 17th at midnight? I would have said no. It's just going to get punted down the road again because it's part of an overall China package. I don't believe that anymore. What's happened is the tone or the tolerance of the lawmakers that put this law in place almost a year ago, along with an $850 billion penalty, we've reached the end of the road. And the reason you would know that is if you listen to the signal coming out of Ludnick, who calls it straight. In the last 48 hours, he said, look, when asked, is TikTok part of the package with China? Because China actually has a separate negotiating team that is working on all the other countries. So we have all other countries and then just China, different team. They have, this Ludnick signal is we've chopped TikTok out of the equation. We're more concerned about an overall package with China that may or may not include TikTok. It's just a small fraction. And the reason that's probably true is from Xi's perspective, it's a really interesting dilemma, because if you look at ByteDance, who owns, ByteDance is basically controlled by Xi because he's got the golden share. Although there are many international shareholders of ByteDance, and it's been one of the greatest investments in the last 10 years ever. But today, it faces a serious problem.
Including, by the way, some blue chip US institutional investors in ByteDance,
well aware.
which we don't talk about quite so often.
Yeah, we know who everybody is on this deal, because everybody's been working on it for over a year. So here's the problem. If tomorrow morning or September 17th at midnight, TikTok goes dark, and you're a ByteDance shareholder, you don't give a damn. It's only 8.2% of the market cap. Does Xi give a damn? No, he doesn't care. He didn't care when they turned it off in India. And if you're a shareholder of ByteDance, you didn't care. The market cap kept going up after the India shut down 4 or 5 years ago, whenever it was. But there's a new problem. And this is a nasty problem. And I'm not sure how it's going to get resolved. If it gets turned off in the U.S. September 17th, it doesn't mean it's not for sale. It doesn't mean it couldn't be sold later, but obviously the asset value starts to diminish as all these accounts leave it and go to other platforms. But there's another issue, and I don't know how to calculate this. Nobody does. The minute it gets shut down in the U.S., Canada will follow suit. Small market, 2.5% of world GDP, but market cap 8.5% gone. Then Canada add another 2%. Then if all of a sudden you're seeing that in a Nordic country or in Europe, and you say, wait a second, why'd the U.S. turn it off? Maybe it really is spyware. And slowly, country by country, they start to shut it off. Because I don't think it's going to have that big an impact. Maybe for 5 days people are talking about it, but after that, in India, 4 days later, they didn't give a damn. So, and all of a sudden, you're a ByteDance shareholder saying, what is happening? It's a domino effect of click, 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 countries just shutting you off. And where does it end up? Where it started, in China. Well, that's not worth anything compared to what a global network like TikTok is today. So I don't know how you fix this problem, because this is not a decision Trump gets to make. If Xi doesn't want to sell it, he's just not going to sell it, period. And I don't think he gives a rodent's rear end. He just doesn't care. And I think the market has woken up in the last 3 or 4 days and said, whoa. That's why Ludnick is saying maybe we just shut it down. We just turn it off. And that's not good news for me, because I want to buy it. you know, but it doesn't matter what I want. It doesn't matter what any of the syndicate buyers want. If Chi doesn't want to play ball,
right.
we're talking days.
Yeah.
September 17th is not that far away. So TikTok is back in the news, and now you understand the nuance of it, the je ne sais quoi of the TikTok dilemma.
So if I start seeing disclosures that Kevin O'Leary is buying Meta stock, I know that your conviction that TikTok's going to get switched off.
I'm disclosing what I'm doing right now. I represent, quite a bit of digital buying every week across 50 plus companies, and all we care about is the lowest customer acquisition cost. But we are definitely diversifying our risk now. We are starting to do contracts elsewhere just to make sure that we're just not naked in the wind September 17th.
Yeah.
And I'm not the only guy doing this. I mean, the beneficiaries right now are definitely Meta. They are definitely, even Meta's Instagram as well, but Google, remnant cable television. There's all kinds of ways that we can now go acquire customers that do not involve TikTok. I would say to anybody that's got their entire revenue stream tied to TikTok, I would wake up and smell the clock, because it's coming. And I would say right now your chances of being lit up the 18th of September are 50-50.
Interesting. Can we talk about another company that always seems to be at the top of people's minds, and it's a public one, and that's Tesla?
Yeah.
You've talked about Elon Musk quite a bit. You've referred to him as the world's biggest industrialist right now. You've drawn comparisons in some ways with Steve Jobs. You've been a CEO, you are a CEO, successful CEO. The question I have for you is he getting pulled in too many different directions? Does Elon Musk need to do what some of his Tesla shareholders want and start focusing?
Well, for anybody else, I'd say yes, but not for him, because you have the history of executional skills. The successes of so many different mandates, diverse mandates, whether it be SpaceX or Starlink or Tesla or some of the robotic projects he's involved in. Even this restaurant he lit up in L.A. looks like it's going to be wildly successful.
Yeah, the Hollywood diner.
It's sort of like anybody else couldn't do it, but he can. But I've also learned something else recently that I hadn't thought about. In able to do the things that he does, his real talent is choosing the people that have these mandates at the head of these companies. Because I've recently been involved in discussing some, mutual opportunities with some of these companies and our companies. His guys are not normal guys. And I mean that there's women involved too. The SpaceX CEO is a woman. She's unbelievable. But his team are not normal bureaucracies. They don't work the traditional way a large company works. They are given very short mandates, could be 90 days, could be 180 days to get a massive project done, and they don't let anything get in the way. And if you can't work at their pace, they'll just roll over you. So it's not quite. I've done business with a lot of companies, and a lot of large companies, and I've never seen anything like this. And the reason he's going to win, in my view, and why I think investing in his companies, as long as he's keeping this mandate in place, is, for lack of better words, they don't f*** around.
Yeah, they just do it.
They just do it.
Yeah.
And they tell the governments that they're going to work with, if you can't keep pace with us, we're just not going to work with you.
Yeah.
We're going to go somewhere else. And it's almost refreshing to see this, because, I work with a lot of governments and a lot of mandates in a lot of countries, whether it's in Europe or in the UAE, or whatever. I've never quite seen anything like this. And the only reason I'm confident that it works is it has worked, and you can see the results. That's why I'm kind of disappointed he's not doing the Doge thing still. If they'd let him continue to just Doge it with the government, it would have been good. It would have been. I know there's a lot of controversy and all that, but if you saw it and see it the way I see it, under the covers, so to speak, these guys, it's like that. I've said this analogy before. That famous line in the movie, who are those guys? Like they just keep riding over the sand dunes coming at you. they're just amazing. And so I say, I think Tesla's going to be. I'm an investor. I mean, I just sit back and wait. I think there's a lot of robotic technologies, taxis. I don't focus on any one quarter, and I really don't look at the stock because the roller coaster is insane. But I bought that stock before it even split because my son was an intern there.
What do you think about the possibility that Musk just consolidates that portfolio more and more and just merges more of these companies together? I read Walter Isaacson's book on. Did you read the book on?
Yes, I did. I know Isaacson. Yeah, definitely.
And I tore through it, and there was just one chapter in there which really struck me because I've been a CEO of business where Elon grabs his engineers and his fixers from his different companies and will sometimes just sort of drop them into one of the sibling businesses to go fix something because it suits their skill set. If he's doing that anyway, and this apparently happened at Twitter, it happened at SpaceX, would you be open as a Tesla shareholder to perhaps just consolidating all of these under one sort of Musk holding company and it's publicly traded and just let all that synergy happen anyway?
Yeah. I mean, if you own Tesla stock, it's in Elon you trust because you shouldn't own it if you're questioning his mandates. I mean, you just shouldn't.
And the deputies aren't enough. So you just said he hires great people.
But I think his real talent is in hiring people. That's my personal opinion, having met some of the people. I mean, my goodness. But I've said that already. I think the reason I think that a consolidation will occur at some point is all of these businesses require, and this goes back to our original conversation, data centers. They all do. They all require massive amounts of compute power and AI and data centers. And to me, the most economic way to do this is to consolidate these businesses together because they're all in one way or another linked and drive them out of, the guy that builds the biggest data centers is going to win. Actually, countries that have the biggest data centers are going to win in wars, but in industrial design or whatever, in AI or in execution of all these different technologies, whether it be SpaceX or it ends up being Tesla, Tesla is actually a giant data gathering business. That's what these cars are running around, providing data back to the mother and providing high resolution.
And the charging stations too. It's data on other people's cars
of course.
Right, yeah.
But you need massive data centers for that. And so I think if you're Elon, you say I'm going to consolidate everything and I'm going to spend a ton of money on CapEx on data centers, and that'll be my competitive advantage.
Interesting.
Yeah.
Interesting. Grab that scale.
Well, it depends how much it's power. Data centers are power contracts. There is no power in America. So it's very, 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 very hard. We're 15 years away from small nuke power stations. They're so far away. So it's really about stranded net gas now. That's what I'm focusing on.
I was going to ask, so you're investing
Yeah, I invest in stranded net gas contracts and access to pipelines and partnerships with pipeline operators. Nat gas and two-cycle turbines and the technology around converting nat gas to electricity is the lowest. It's the path of least resistance for the next decade.
So it's fascinating, Kevin, because you've made a couple of allusions in this conversation to private investments that you're doing, right? You've just described it for the nat gas contracts. You've described it for some of the data centers that you're working towards building out. On Shark Tank, right? You're known for investing in young private companies. On the other hand, you're also very famous for your comments around investing in ETFs, to your point, in Ocean.
Well, that's a diversification strategy, yeah.
But which to those who have the option of doing both, right? There's passive investing, which is a diversification to the public equities, but it feels as though where you light up is talking about these businesses where you actually have control or hyper influence because it's private, you're owning very high percentages of it, you're not just trading the shares. Talk to us about your preference.
Yeah, I don't really invest in PE funds because I trust my own executional skills in allocating capital and finding people to drive mandates. I've done that my whole life. So people always say, well, why don't you put it into my fund, a 2 and 20 PE fund? I said, well, I'm actually going to compete with your fund. If you're And I'm okay to do with that, or I'll partner with your fund. I'll do some projects with you. But when it comes, if I, 2 years ago said, as I did, I need to be in the data center business, I just found the very best people in the data center business. And I would put my team up against any giant funds team. I really would.
Why do they work for you, Kevin? Is it because you're famous? Is it because you pay them
No,
more?
no.
How do you hire these people?
No, because I'm not greedy. I share upside, a lot of it, with my teams. I want them to be filthy rich. And we don't work 9 to 5. That's not how we work. We're project-based. I have remarkable talents working for me, incredible people. We work 8 days a week. We do stuff, and we're doing it because we want to. And I'm a multi-sectoral investor. I have watch insurance, and I have data centers, and I've got a whole team now working on a new asset class that I've decided to look at very closely. You know what I like? I like to look at fund flows globally, and I watch for a couple of years, particularly on alternative assets, where I've made a lot of money in my life. I love the stock market, but I'm always intrigued. Where does capital go when it's looking for a longer term return or outcome? And I've been in all kinds of asset classes: contemporary art, modern art, watches, as you know. And one that really intrigued me in the last few years, I've been watching sports cards.
Oh, collectibles.
Yeah. And just indexing their momentum of capital and the prices that are clearing at. And what I like to do is look at public data, scrape public data. AI can help you do this now, and look at which cards actually appreciate. And remarkably, in that sector, it is very similar to contemporary art, where if you're going to put, you always say to yourself, well, I don't want to spend too much money on contemporary art. I'm going to buy a $25,000 Warhol print or a $50,000 print of Chagall or something. That is actually a mistake. The returns are abysmal in those. You got to step up and buy a $40 million Pollock. And there you're going to get a return, because it's a very unique thin market, but that art seems to be desirable perpetually.
And the scarcity is so profound at that.
Yeah, it's very akin to the highest returns I've made on watches have been on watches like Piece Uniques from F.P. Journe or Audemars Piguet, or certain Pateks that are very, very hard to get, or one-of-a-kind Tudors, part of the Rolex family, or very, very rare Rolexes. They represent 80 or 90% of the market cap of my collection, which is huge.
And you've got some. Come on, you're gonna have to show us
Sure,
your watches. There's this box lurking.
Yeah,
underneath your mic.
Yeah, you're absolutely right.
Let's take a look at
this is what I'm going to wear in the next 2 days. I wear 6 pieces a day.
Okay.
2 in the morning, 2 at lunch.
There's 10 in here. So for those of you who can't see,
yeah, that's right. These pieces are. So there's a mix in here, because I'll tell you a story.
Yeah,
I'll tilt it up a little bit.
Tilt, yeah.
So these 2 watches are vintage. One is a Seiko and one is a Patek Philippe from 1950.
Oh, wow.
They had a starring role in a movie I'm in called Marty Supreme, coming out Christmas Day.
Yeah, we'll talk about that.
I wear 2 watches, as I always do, and they've actually got a role in the movie. Some of these watches, such as this one, right at the end here, this is a Piece Unique vertical tourbillon. It's only one in the world. It has a red K where the 12 is. Above it is a meteorite Rolex Daytona, very rare. But some of the other this is also this is the 175th anniversary world timer from Patek. Just a very rare watch. This is a one-of-a-kind Tudor made of silver for Shark Tank. It's got the Shark Tank logo on it. But beside it are some watches, and this is a Tudor ceramic piece. The remarkable thing about the Tudor Watch Company, which a lot of people have started to figure out, they experiment with materials. They have carbon, they've got ceramic, they've got silver. They're owned by Rolex, but they're allowed to play in a different garden. And so you've got the Rolex mothership above them, but they make pieces that Rolex never makes. And I've started to collect heavily into Tudor because I love diversity of materials. But so a few years ago, a producer came up to me on Shark Tank set and said, Kevin, you're wearing these red bands. You've got 2 watches on all the time. It's your whole shtick. Everybody knows about it. But when people see you, you wear watches that no one can buy. Nobody can either afford or they just don't exist because they're one of a kind. So you're coming off as a watch hole. And we think it's bad because you should be inspiring young people to get into horology, not show them what they'll never have. And I thought it really hit me like a ton of bricks. And ever since that day, on my left, I wear a piece unique, something insane. This happens to be an Elegant from F.P. Journe, one of the most desirable watches in the world, originally made for women. It's a remarkable piece. It's so simple. It's a quartz watch, but when you put it down, it goes to sleep after 20 minutes and uses tiny number of microns to remember the time for even 2 or 3 years.
Oh, wow.
And then when you pick it up in the morning, it just goes back to where it should be. And he did that because he thought women hated setting watches. My wife hates setting the watch. So she has an Elegant. But when men saw it, they wanted it too. And it was an entry-level piece. Now it sells for well over $100,000.
Wow.
And so I love it and I wear it a lot. On this side, though, is a Wren, a watch you can buy for under $1,400, a stunning dial. Look at the,
Beautiful blue dial. And tell us why all of your watches have red watch straps, Kevin.
It was a few years ago, many years ago, probably 14 years ago. Again, Shark Tank, where I started, I had a wardrobe with black suit, white shirt, black tie, tie pin. And I happened in one year to wear a red band on my left wrist. And I came the next year with a different band, And the woman running wardrobe said, wait a second, where's the red band? I said, why do you give a She said, continuity. I mean, we don't want you. You're going to look like you did last year. You always wear the same stuff. Where's the red band? I said, well, I got a lot of watches this year. Don't have a red band. She said, you're not going to be on Shark Tank. You're going to wear a red band.
Good for her.
And the whole thing started. And now I think I'll take credit for this. Worldwide sales of red bands are up about 40% because they look great and it's men's fashion. But now most of the brands make them for me, and I get my watches already with pre-installed red bands. And so that's my shtick, it's the red band thing. But now I wear 2 watches every day, and I pair up a crazy, as I call my crazy chicken watches, which, are just, some case, millions of dollars. And on the right, sometimes $200 piece.
Yeah.
But the dials are always beautiful.
You've actually founded a watch insurance business, and I don't want to let you go without talking about it. I have nerded out on the insurance sector. I've worked on a number of insurance deals in my day. You've partnered with Chubb to do this.
Yeah.
And the question I have for you is, why does the watch space need its own specialty insurance line? Right, you can get riders on insurance policies.
Why? That's what I did, and then I had 2 collections ripped off under rider programs on my home insurance.
Okay.
The problem is, there was a time when you'd buy a watch, and then over 5 years it would diminish half in value or maybe 2/3. That is not the case today. High-end horology, like a Rolex, 45% of our contracts are Rolex. They don't go down in value. The older they get, the more valuable they are. And so my problem is, you have to read the fine print of what you've actually got in your home insurance package for your jewelry, for your art, and for your watches. I wanted to solve it for watches in 2 ways. I wanted to make sure that I could insure my watches for one of 2 values. One, the purchase price I bought it for. That's one option.
Mm-hmm.
Or last night's worldwide auction price.
Oh, so the greater of.
The greater of.
Right.
But I have the option. I want the option.
Yeah.
So I can actually write the contract to the purchase price or the price of what it's worth in the open market. And I couldn't find that product. So, and I wanted it for me. I was trying to solve for me because I don't want to insure every watch I have.
Right.
I have a lot of watches. I just need to insure the 50 or 60 or 70 that I'm, traveling with and wearing for the next month. And so I started to, go into the whole watch insurance space. I interviewed all the CEOs of the companies that provide rider programs. I explored it myself, and I realized, wow, it doesn't exist.
Even in the age of AI, with all of the data you could possibly imagine.
You have to understand the the watch insurance, the insurance industry that you may be familiar with is one of the most highly regulated industries in the world, particularly here in the U.S. So then I went to see the CEOs of all the Swiss, German, French watch companies and said, before I go into this business, are you going to compete with me? And here's what I learned. In order to issue insurance here in the United States, in any state, you have to submit your fingerprints, your face, your eye scan, all your background data, as if you were on your way to prison.
Or going through TSA now through an airport, right? Because they're sort of doing facial recognition, all this stuff. Anyway.
Here's what I can guarantee you with 100% probability. I guarantee you this. No Swiss watch executive is ever going to let himself be fingerprinted by any government anywhere. That's just not the Swiss mentality. So I am, I now know that they'd be willing to partner with me, and I get to take my piece out of it because I am willing to be, and I already have been fingerprinted. I've got the stains on my fingerprint. But I'm also giving them a tech stack that I've spent 2.5 years with a whole team of people. I've found some great executives in the insurance industry. I've got partners. And then one of my favorite guys in the watch industry worldwide, Danny Govberg, who started Watchbox, now 1916, said to me, Kevin, can you write this so that it's on our POS? So if I sell a watch, I just click here to buy insurance.
Exactly, yeah.
Because people want to walk out of the store in a brown paper bag insured.
Like buying a car.
Exactly, because people are stealing watches left and right. And I said, Danny, that's a hell of an idea. And he said, well, I want some exclusivity for a period of time. Let's do WonderCare. It's called WonderCare.com. People go look it up. Let's iron out all the bugs for all of my stores. And then you get to work with every brand, including Rolex, and we will be your guinea pig on this. So I've worked very closely with Danny, George Mayer, David Kaplan, the whole team there. We're a family together, and we've been working, and we just lit it up a few weeks ago. And wow, here's what's so cool about it. You buy a watch, all right? Because no one had thought about this. You see, the thing about why you want to test this is the unintended outcomes, the unknown outcomes in this business. We sell a watch. They buy the insurance. The policy gets written in 9 seconds. It uses AI to do it.
Yeah.
It issues a PDF of the policy to the store and to the customer, right to their email. It puts them in a digital wallet. They can visit that image and the policy anytime they want. Then this person goes home and insures 3 more watches back on this site. These watches were not necessarily bought or from, at that time, Watchbox, but Watchbox had lost track of these, as most retailers back 10 years ago, 15 years ago, don't know where these watches are anymore. And so we accredited those policies back to 1916. So all of a sudden, we've increased the number of policies because they share in the policy premiums. We're acquiring their customers for them for free. And we have never bought a customer. One of the incredible things that we tested, and this is unique to us, and I think it's a competitive advantage, it's extraordinary. I've got over 10 million followers on social media. Everybody knows I'm the watch guy with the 2 red bands. Like they just do. From all of the years of Shark Tank and everything else. We did a 15-second sample commercial, stuck it out there. Because acquiring customers for watch insurance is really hard. It's very expensive. Most people don't make money doing it because the customer acquisition costs more than the policy is worth. We never spent a dime. We just put it out on my social media. Thousands of policy requests, thousands. And I showed it to Chubb, and I said, have you ever seen anything like this? They said, never. So we have a wicked advantage. When we launch it to the open market, we're going to be acquiring customers for free. And we're going to service them. The key to a product like this, just in the final throes of negotiating a new CEO for the company. I love doing this. I'm hiring, hopefully, a killer guy. Could be a woman. When I say guy, I mean generically. And building the team. But I'm very excited about it because I love watches. But it's a solution to an industry, not just domestically, because I'm lighting it up in the UAE in November. So I'm very passionate about it because it solves a big problem. this is about the love of horology and solving a big pain point. And I don't think I'm ever selling this business. I love it. I just love it. It's such a community.
Yeah,
some businesses are not for sale.
Yeah.
This is not for sale.
Yeah. Before I let you go, and I must let you go, there's another passion project of yours, and that's movie making. Tell us about the movie that you're sort of wrapping up filming at the moment. I was fascinated to hear about this.
Yeah, I mean, I'm really surprised. About a year ago, just over a year ago, in June, I get a phone call from Josh Safdie, who's the director of Uncut Gems, and Ronnie Bronstein, the writer of Uncut Gems, which is an Adam Sandler movie that I love. I just love that movie. It's so dark. It's funny but crazy.
Okay.
And so he said, "Hey, listen, we're shooting a movie called Marty Supreme, and there's a guy named Milton Rockwell in it, richest man in America in 1952, brought the ballpoint pen to America. This is all fact out there, and we're looking for a real asshole to play this role, and you're it."
Yeah.
And I said, "Why am I it?" And Josh said, "Well, Ronnie's a huge Shark Tank fan, and he just wants you, the same guy, to be Milton."
Was that the nicest thing anyone's ever said to you?
No, but I've heard that line from, it's kind of funny because when I started Shark Tank, Mark Burnett said the same thing to me. He said, "We're looking for a real asshole, and you're it. Let's put you in this seat." And he said it in a nice way, but I can't change. I am what I am. So he said, "Just be yourself," because I didn't take any acting lessons or anything.
Yeah.
And the challenge was to do scripted, and I, Gwyneth Paltrow helped me, Timothy Chalamet, a play across from, helped me. I got in the groove eventually. I must say, the thing that made it work for me was when you're in a movie like that and you're set in the 1950s and you take over the Plaza Hotel, for example, and every single detail is perfection. Every wardrobe, even the straws, even the menus are 1952, and you're shooting it at 2 a.m, and you're doing it for the 30th take. All of a sudden, you are in 1952, and you're there, and your acting isn't acting anymore. You're there, and I really believe that I was in 1952. And I remember after some of these shoots, like would go for 20 hours. I was staying down at Casa Cipriani's, and my wife was asleep, and I'd worked all night. And I got there, we'd finished at 6 a.m., and I got down, and I was so wired because we'd shot like 7 pages. And I went upstairs to the breakfast guy, and I said to him, "Listen, I want a bottle of Montrachet, and I want some scrambled eggs and some smoked salmon.
Yeah.
But I want the Montrachet now." And he said, "Sir, it's 6:45 in the morning." I said, "Not for me."
Not for you.
No, I'm in 1952, and I want my Montrachet.
Yeah.
And by the time Linda came for breakfast, she said, "You just polished off half a bottle of Montrachet. What's the matter with you?" I said, "I can't explain it, but I feel much better about it now." And I remember that day. I'm really excited about it. I'm seeing that it come together now. I'll let you judge the work on Christmas Day.
Well, it's great to talk about it because I can see you just lighting up talking about it. This clearly is sort of a new skill that you're developing there and a new world to immerse in.
I'll leave you with a final thought to everybody out there. If you want to keep your life interesting, spend 30% of the day doing something outside of your comfort zone.
Do new things. Yeah.
Something you don't know how to do. You will figure it out, and it will just keep you healthy. That's what will happen. Curiosity
Yes,
to try new
things. Kevin O'Leary, thank you for joining. Thank you for coming to Brew Markets. We have something very teeny tiny in the watch category for you. We won't sort of flash any brands, but you should just know we'll
Brew Markets.
Open it.
Can I?
Absolutely.
Okay, so you don't want me to show the brand?
So, but and it doesn't have a red strap, but that's very fixable.
Well, that is really something else. Look at that.
Our producer, John, was absolutely adamant that a watch needed to be in your hand by the time you left.
That is vintage. I mean, this tech is like from 1979. And yeah, it's got the right time on it.
There you go.
How cool is that?
We are sadly out of time, Kevin. Thank you so much for joining, and please come back. There's a lot more to unpack as Brew Markets continues to take off. I'm Anne Berry, and for more on what's hot in the markets, what's going on in the macro, and for more conversation with the voices with some of the most interesting perspectives on all of it, come find us. We're on social. Our handle is @Brew Markets. We're, of course, on YouTube, and we're always at www.brewmarkets.com.